you see are building blocks to a $600,000 to $650,000 price, and perhaps $1 to $1.5 million price by 2030. We think most people in the world, at the very least, should have some of their assets in Bitcoin as an insurance policy against confiscation of wealth.
The CEO of ARK, Cathie Wood, a well-known figure in the world of finance, has recently shared her insights on Bitcoin's future prospects, as well as her thoughts on the Federal Reserve's actions and the broader market dynamics. Wood's perspective on Bitcoin is particularly noteworthy, as she views it as a formidable competitor to traditional financial systems and asset classes. Within institutional circles, she stands as one of Bitcoin's most ardent supporters, consistently championing its potential to reshape the financial landscape. She has firmly asserted her bullish stance by reiterating her price prediction for Bitcoin, confidently stating that it could attain a minimum valuation of $600,000 per coin. Her unwavering belief in Bitcoin's ability to become the linchpin of a financial revolution is rooted in its multifaceted utility and ever-expanding use cases. As the head of ARK Invest, Cathie Wood brings a wealth of experience to the table. Her firm has closely monitored the performance of the S&P 500 over the past few years, giving her unique insights into market trends and patterns. Recent times have witnessed a protracted and challenging bear market for stocks, indicating a volatile and uncertain financial landscape. In the latter part of 2023, regulatory matters are expected to gain prominence, with potential implications for the market's stability and growth. These developments underline the importance of Wood's perspective as she navigates the intricate financial terrain. For those seeking in-depth analysis and a comprehensive understanding of Cathie Wood's outlook for the financial market and Bitcoin's upward trajectory, her latest interview is a must-watch. In this interview, she delves into her views on the evolving financial ecosystem and where she envisions Bitcoin's role in this transformation. Wood's predictions and insights carry significant weight in the financial world, making her a key figure to watch as we move forward in an ever-changing financial landscape.
The institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%, that may have gone down a little, but if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2%, and then they migrate to 5%. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets, but we make very cautious assumptions. And I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Sovereign treasuries 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates, and those are pretty conservative assumptions, we would suggest.
A study commissioned by ARK Invest, a prominent player in the financial industry, offers valuable guidance on making strategic investments in the cryptocurrency sphere. Whether your primary goal is to reduce investment volatility or enhance the risk-adjusted returns, the insights from this study hold significant relevance. According to Cathie Wood, the visionary CEO of ARK Invest, adhering to the principles outlined in this study has the potential to bring about a substantial increase in the valuation of Bitcoin. However, a significant challenge arises from the substantial number of Bitcoin holders who exhibit a strong HODL mentality, refusing to sell their holdings. This hodling behavior creates a bottleneck in the flow of digital assets within the cryptocurrency market. This study provides a comprehensive roadmap for crypto investors, highlighting strategies that can effectively balance risk and returns in the cryptocurrency market. Cathie Wood is a firm believer that widespread adoption of these strategies has the power to exert a transformative impact on Bitcoin's overall value. Nonetheless, a critical issue to consider is the considerable portion of the Bitcoin community known for their unwavering commitment to retaining their holdings, leading to a substantial illiquid supply. This prevailing pattern of hodling, while rooted in strong beliefs, has the potential to impede the fluidity and dynamism of the digital commerce space, a factor that merits careful consideration in the ever-evolving world of cryptocurrencies.
So now with the ETF, what is going on? I think, we know the research people at the SEC, and they know what they're talking about. They are really good. We've met the head of FinHub now, who reports directly to Chairman Gensler. And for me, the disconnect is they know so much and they are so good that I believe this was much more Gary Gensler standing in the way. I don't know for sure because they could never say something like that. I just know from how we have discussed Bitcoin with them that they really understand it and they understand its merits. Most important. So this is Gary Gensler. Why he allowed, and I will say he because I think he's the gating factor here, why he allowed a Bitcoin futures ETF, which involves counterparty risk, and not a Bitcoin ETF, which does not involve counterparty risk. In fact, it is backed, ours would be backed by Bitcoin 1-for-1 in cold storage at Coinbase. That's why Grayscale has won its case. It is that argument. And so I think Gary Gensler's personal Vietnam is coming around to haunt him. I do think the SEC is moving now. He has, in effect, said, hey, I'm not the only decision maker. There are 5 commissioners here. That means some of the research that we believe is percolating up to those commissioners might be getting through to them and might be the grounds now for the approval of a Bitcoin ETF. And we don't think that the SEC will approve just one. They will probably approve a group of them. And that means it will become a marketing battle. And we do hope that our research, how much we give away our research, mostly because we feel it very important to educate. It's one of our mission and values. We hope that helps us as we, hopefully being one of those approved, go out and start marketing.
One of the key areas of focus for Cathie Wood throughout this year has been the evolving landscape of cryptocurrency legislation, particularly within the confines of the House of Representatives. This development signals a notable surge in interest surrounding the crypto space. While the path of crypto legislation may encounter challenges stemming from political opposition, Wood maintains a strong belief that the mere initiation of these discussions will prove beneficial to the cryptocurrency market. She anticipates that this conversation alone will pave the way for a plethora of growth opportunities in the months to come. In light of Cathie Wood's recent interview, where she shared her insights on a spectrum of critical topics, such as government debt, the rapid pace of economic growth, and the ever-transforming cryptocurrency landscape, what are your thoughts? Feel free to share your opinions in the comments section below. Wood's perspectives provide a unique lens through which we can assess the complexities of today's financial and digital realms. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.